So stay in the moment before it's gone. Let's do something we'll never forget. Live a life that we won't ever regret. Hold me closer before the night ends, 'cause this moment is as good as it gets. If tomorrow goes up in flames, rather burn out than fade away. Make the most of the time we got left, 'cause we're never gonna be this young again. Oh, no, we're never gonna be this young again. No, we're never, never gonna be this younger. No, we're never, never gonna be this younger. No, we're never, never gonna be this young again. No, we're never gonna be this young again. No, we're never gonna be this young again. No, we're never gonna be this young again.
Set me free, why don't you, babe? Get out my life, why don't you, babe? Yes, you don't really need me, but you keep me hanging up. Set me free, why don't you, babe? Get out my life, why don't you, babe? Yes, you don't really love me, you just keep me hanging up, hanging up. Keep me hanging up. No, you don't really need me, you just keep me hanging up. Set me free, why don't you, babe? Get out my life, why don't you, babe? 'Cause you don't really love me, you just keep me hanging up, hanging up.
Let your mouthpiece tell.
Okay, good morning. Hey,
Hey, yeah.
we're starting. Welcome everyone in person and on Zoom. We have an awesome presenter today, Mike Ross, author of The Financial Blueprint for Real Estate Agents and from Northwest Premier Creative Financial Solutions, helping real estate agents save money on taxes and do their bookkeeping. And so we will keep the announcement short at the beginning so we can get to Mike. We are cruising along on a night. Cameron taught yesterday. Thank you for teaching. And then tomorrow is Pam and Thursday is Grace. So that is an exciting lineup this week. Next week is Kevin Willis, Dwight, and business planning. So if you've been coming, keep coming. If you haven't come, feel free to pop in on any of them. And we have just such great agents teaching it this series. So Going great. Next week on Wednesday, our CE class is going to be taught by Foundations First. It is winterizing your property. So something that a lot of us want to be able to educate our clients about and know for ourselves. So register for that one just so we have account for food and CE certificates. Hope to see you guys there. And then our big event is once a year, we do our business planning clinic, usually at the end of October, beginning of November. So this is November 14th, 9 to 2. And we'll bring breakfast in, we'll bring lunch in. You will leave with a full business plan for 2025. It's like an intensive workshop. You'll have lots of time to work on your actual business plan during that time. This one, please register for because we print a lot of materials out. We help you with some reporting of some of your numbers and different things like that. So you can kind of look at where you're at, so you know what your goals will be for next year. And again, we'll be ordering food for breakfast and lunch. So it does help if you register for this one. And hopefully we will see almost all of you guys there. We usually, not usually, almost always pack the house for this one because we just do it once a year. So I know some of you guys are already registered, but this is the big thing. A couple of people have asked if they can bring a friend. Yeah, absolutely. So bring a friend. It is a great opportunity. Usually, if we bring in an instructor from Keller Williams University, we have to charge to pay for that instructor from business planning. But so for the last 3 years, we've just taught it and with all the materials, and it's great, and we love it, and we love helping our agents.
And this is the most formative class that KW has to convert your work to a business. How you think about it at base level as being a business and planning for it.
Okay. Open enrollment is happening now for health insurance. So if you need discounted health insurance, go to any of those links. They're also on our KWPP agents page, but you can explore their plans or schedule a one-on-one with one of their consultants. And they're specifically group health plans for 1099 real estate agents. So good to for you and your family. Right, our friends at Homefront Mortgage. Ashley and Kylie, we're happy you guys are here today, and you have a class on Thursday that we have a lot of people registered for, right?
A little bit of market update first. So Monday we had a drop in and as you guys all know, also Thursday is going to be our Get Started Master's class. So we're going to be out. So you know how to practice it. Investors or have clients and like house or so that passed out. This is how we can get it. So make sure you use barcode and budget will be a bunch of there. I don't know.
And they happen to be your number one loans right now that you're closing?
Yeah. So
And what are the types of people that you're seeing that are using these? Like, why are people using these right now? What are you seeing?
most of them are for the property. I just help somebody have them. What's happening? So also somebody who can't qualify with this position, you know, so with traditional financing, down payment 20%, but I know
Awesome. Thanks, Kylie. Joe, give us a quick compliance update.
I'm the guy with all the deadlines. So if anybody needs code of ethics, it's a class tomorrow virtual, over public token from 9 to 12. I'll send out a link. And then I sent out on Friday those that have licenses expiring in the month. Thursday, or excuse me, on Friday, reminding you. Then, of course, Monday is a legal holiday. Office will be open for your time. That is all I got.
Awesome. Thank you,
Great.
Joe. Okay, before we turn it over to Mike, I just do want to do a quick introduction. Courtney in the back, wave to everyone. Courtney is joining J Hill Property Group. It's her first meeting with us, so we're happy you're here. And then I just want to say a little congratulations to Ashley, because any day you're gonna have a little nugget with you, a little mini real estate agent. Also, Chris Murray, one of our agents, is having a baby right now today. Also, his wife is. And so lots of little KW babies running around. So, all right,
Good for future Halloween parties.
good for
By the
future.
way, who won the Halloween best costume?
Dwight is the grand champion of our Halloween best costume winner. And Joe is the winner of the best office decor. So you guys crushed it. Yes, thanks for everyone who participated in our Halloween trick or treat. It was fun and we had a lot of great feedback. Next year, we're going to turn it into more of a client facing event for you guys to invite your clients to, because it was really fun. So, all right, Mike, thank you for being here. Take it away. We will stop talking and floor is yours.
Awesome. All right, you guys ready to talk about everyone's favorite subject in the world? Taxes?
Woo.
Yeah, woo! All right, well, let me start off with a quote that I like to tell you to all the people who are scared of taxes. And it is that if you think about taxes, they really are an investment in borrowing power. Borrowing power. So, yes, paying your taxes is an investment in borrowing power, okay? I'll probably say that over a couple more times so I can pronounce it correctly. So first, I'm going to talk a little more just about our company, who we are, and then we'll dive into the really fun stuff. Now, on your table, you guys should have the 100 deduction cheat sheet, and you should also have a flyer to our upcoming event that's coming in December 12th. You not have one? Anybody not have one so I can hand these out? Do you want to help me? Hand up. So every year we do a big class or a big event. It's called Preparing for Profit. And in this event, we rent out the AC Hotel on the waterfront, and we fly in some amazing guest speakers. This year, we're flying out this really edgy, awesome, badass real estate coach from Arizona. His name's John Story. He'll be there to get you all fired up. And then we also have another lady we're bringing in. She has done over $100 million in real estate development over the last 10 years. And she is a badass. And we'll talk about how she's built her company and her brand from the ground up. And then we'll be talking about our company, Switch, as well. My business partner and I, in order to fulfill our mission of being the go-to trusted financial advocates for real estate agents all across the country, we're actually rebranding, and Northwest Premier will be no more. We'll still be the exact same company, operate the same in that sense, but the name change will be happening, and we'll reveal that coming up in December 12th. Okay, let's go into it.
Because you've expanded out of the Northwest.
We have expanded out of the Northwest, so yeah. So we started off, actually, let's do the background right now. All right, one more time. My name is Mike Ross. I'm one of the owners of Northwest Premier Creative Financial Solutions. And our mission is to be the go-to trusted financial advocates for real estate agents all across the country. And we will do that within 3 facets of the company. We have business planning, financial consulting, and then most notably, what we'll talk about today, bookkeeping. So the financial consulting department is what it actually started out as. And this is where we sit in the center hub of our clients' financial world. And we bring all their advisors to the table, sometimes virtually and other times physically, to make sure you know exactly what you have, why you have it, and if it's in line with what you actually want. Now, in today's age, we get financial information and tax information from everywhere, right? You hear all these little tax loopholes you can get from TikTok. You hear the best advice where to put your money from advisors, your team lead, your parents, your best friends. Everyone's giving you their 2 cents of what works for them, what actually works for you. So again, this is why we sit in the center hub and bring everyone together. Now, most people go around and they make decisions in silence. For an example, it's fair to say if you go to your CPA, that their main job is to help lower your tax bill, so and thus by lowering your income. It's fair to say that's their main job. They're hopefully doing that. But then what happens if you want to go and invest in one of the greatest assets known to humankind, which is what?
Real estate.
Exactly. If you want to go to invest in real estate, and you go to your mortgage brokers, without the D, I know you have your own loans, but typically, what do they want to see with your income? Higher or lower? Higher, right? So you just went to your CPAs trying to lower your income, but then you're talking to your mortgage brokers trying to raise it because they just don't know what's going on with the totality of your picture. That's why we sit in the center of the financial world. Make sure you know exactly what you have, why you have it, and make sure it's in alignment with what you actually want to have. We have business planning, but for time's sake, I won't go too much into that. We just have two major quotes we like to say. First one is if you fail to plan, you plan to fail. Second one is if you aim at nothing, you will hit it every single time. Okay? It's important to know your numbers, but we'll get into that in just a second. And then what we're most known for is the bookkeeping department. And that's why we're making the name change and doing all this other things. So, small little sales pitch right here, okay? So, in order to fulfill the mission, we actually wrote a book that's called The Financial Blueprint for Real Estate Agents. In this book, we'll talk about literally everything you need in order to keep more of your hard-earned money. You guys work your ass off for it, right? So we want to show you how to keep more of it. In this book, we talk about LLCs, S corporations, C corporations, partnerships, cost segregation studies, rental properties, how to build your own benefits package, how to hire your kids, hire your spouse, deduct every single vacation, which will now be called business trips for the rest of your life. This book right here is worth its weight in gold. I promise you, if you read this, you will be tax efficient and run a smooth, successful business. Okay? We created this book not from some ghostwriters. We actually did it ourselves. Full transparency, we did use ghostwriters at the beginning, but no one can actually get inside our brains like us. So this is actually probably written at a 9th grade reading level because we wrote it. So it's very easy to understand. We have interactive parts into it, so you can scan the QR code and download some activities and worksheets. If you've ever read the book, Think and Grow Rich, it's a very interactive book, and this book's just like that, okay? Again, we're not gonna be able to work with every single real estate agent across the country, but this will hopefully help us fulfill that mission. So yeah, they're available for sale afterwards, okay? Just $20 and you can have a copy and I'll let you sign it, okay? Deal. All right, I know, right? That's the reason why I want to buy it. All right, let's dive into some fun stuff. Okay, I think before we go on to tax strategies, it's really important to understand tax philosophy. So, who here can tell me what a tax deduction truly is? This will be a good class. All right. Anybody want to take a stab at what a tax deduction is? I'll give you a free book if you just take a stab at it. Oh, now you don't get it. You had your hand up first. What was it?
Gotta pay us.
It's expense for me to get the income. That one that you takes to get the lay up hand out the free book. All right, last free book of the day. Okay. So I believe I could just tell you the boring way of what a tax deduction is. I have this really good video I like to show because it kind of breaks the ice a little bit, gives me a chance to get a sip of water, and then you guys hopefully will have be a little more awake right now. So, without further ado, can you throw it up?
What's this? Looks expensive.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for the stores, so work is paying for it.
Work is paying for your bedding?
I was gonna leave, but now I don't want to. So.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchased skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. This? Not a write-off.
Oh, well, the bedding's non-refundable, so...
David, a write-off is a business expense used to reduce your taxable income.
Okay, well then, why isn't it called a tax write-off?
It is! It is! You can't just buy things for yourself and write them off.
Well, then I'll return some things. There's not enough space in here for the massage chair anyway.
I should get back to work, just in case any more of your packages arrive.
This is a little more fun way to explain what tax deduction is. Right? Now, I remember getting into the business from my warehousing job as a W-2 person, and then all my friends thinking that it was just, everything I bought was free. We got credit for it. And I'm like, no, it's still, we are the business. It's our business bank accounts. It's still money that we have to put up front. So a lot of education came into play with my friends when we go out and hang. I had to explain to them what it was. So let's dive into a little more, a few reasons on why you want to use some tax deduction, and then let's jump into 3 reasons why you may not want to. Okay. First reason why I want to use tax deduction, the obvious one, is to lower your taxable income. Okay, so every single write-off that you use will go against your taxable income at the end of the year, ultimately lowering your taxable income, which will ultimately lower your tax. So again, everything on that sheet that you have should be coming out of your business bank account. If you do not have a business bank account, we'll talk about that in just a second on how to get one. Okay, everything on there is a write-off that you guys can legitimately use. Cool. Second one, I'm going to be a little harsh on you guys on this one just because I think it's super important. The second reason why I use tax deduction is to accurately calculate the difference between gross commissions income and personal income. Now, this is the #1 reason I see real estate agents fail in the industry time and time again. It's because they do not understand the difference between gross commissions income and personal income. People go out there and they make $200,000 GCI, right? So they live this lifestyle like they make $200,000 in real life, right? So if I told you right now I make $200,000 a year, you guys could probably imagine the lifestyle I live, the food I eat, clothes I wear, car I drive, vacations I take. But that's gross revenue. You also takes a lot of money to get there. Listing photos and marketing and client appreciation events and closing gifts, which will now be called marketing, right? About that second. It's all the money it takes to generate that amount of business goes against what you actually brought in. Okay, so you need to know your freaking numbers. Okay, so with that business planning class you guys are doing, super important. Please know the difference between gross commissions income and taxable net income. Okay. Okay, so track your business expenses. So at the end of the year, you can say, how much money did I put into marketing? Let's break it down even more. How much money did you put into Facebook lead generations? How much money did you put into Zillow? How much money did you spend on photography? What's your gross, what's your profit margins at the end of the year? You guys know that? If I ask you for your year-to-date profit and loss statement right now, can you put it out for me? Okay? You need to know your numbers, because if you want to double your business and you don't know how you got the business in the first place, how can you double your business and where to put the money, right?
It's like you're promoting our business planning clinic right there. It's so true. We always talk about that. And the very first number at like the top of one of the pages is your net personal income goals, and then you work backwards.
Correct, and that's why I get a lot of agents always saying, the magic number is $100,000, right? Every agent that comes in is new, like, what do you want to make? $100,000. Okay, is that take home or is that GCI? Because if it's $100,000 that you want GCI, you're probably going to take home like $60,000. So, need to know your numbers, all right? So it's a reason to use and track tax deductions, and so you know what it takes to generate the income you want. Next one, the deferred taxes for potential savings. Okay, how many of you guys have worked with or talked to a financial advisor who says to put money into your retirement account because you guys don't have one, you should invest in a 401k, a SEP, a simple, something where you can get a tax deduction for this current year. You guys have heard that? All right. So if you put money into a deferred retirement account, you pay taxes on it this year. When do you pay taxes on it? You take it out. Does anyone know when you're allowed to take out money from a 401k or retirement account without any penalties? I know there's stipulations, but just in general, without any penalties. When you're on fire, bro, you deserve that book. 59.5, right? So does anyone know now what the tax rate will be when you guys are putting that? Probably higher than that. I have no idea either. So just be aware when you're saving, when you're using a tax deduction for this current year, you may not be able to know what the tax rate is when you want to use that. I'm not saying retirement accounts are bad. I'm just saying know what you're getting into. Another thing would be a lot of agents come to us all the time and they say, I do not want to pay a high tax bill. Can you please make it look like I make nothing? We say, fine, we can do that. You guys, as aggressive as we can, legally. So we make sure everything's written off. But then the problem is, well, next year you have doubled your business like you wanted to, but we just used all the tax deductions by prepaying expenses and doing everything we could to lower this year. Now you missed out on everything for next year. So it's really important to tax plan, know where we have tax wise, right? And making sure that you have a good game plan and track your deduction. Okay, so those are 3 reasons why you want to use tax deduction. Let's talk about 3 reasons why you may not want to use tax deduction. The obvious one is lending. Here's a story I'm sure all of you guys are familiar with. How many of you guys have shown a home to a business owner or an independent contractor who says they make a certain amount of money, and then you get their tax returns, and they don't make nearly as much as people, or they told you? Probably most of you guys in this room. So again, most people do not want to pay a high tax bill because it's scary, because they're not ready for it. But if you know your numbers and you're tracking your monthly bookkeeping and you know what's going on, you pay your quarterlies or you're an S corporation, all that kind of stuff will help you make sure that taxes aren't as scary because you know what's coming up. Okay? So when clients come on board for us, when they come on board with us, what we do is we always ask them, what income do you need to show at the end of the year to buy whatever properties you're trying to get? Right? A lot of them say, like, we have one client says, I need to show a minimum of $100,000 a year take home income in order to make sure I can qualify for the properties I like to acquire. So our goal is to make sure that they have as many deductions as possible to get them to that $100,000. Okay? Cool beans. Next, avoid future tax increases. Again, if you use all your deductions this current year and then you have a crazy good next year, we ran out of the deduction, so you're stuck with that high tax bill. So again, it's really important to know your numbers and see where you're at, because let's say you're on pace for making, your $200,000 a year, it's normal, but then all of a sudden at the very end of the year, you get a couple of luxury deals and now your income just skyrocketed. No, you're not used to that. That's different. So maybe it makes sense to be able to prepay expenses and do some things to be able to lower that tax bill for this year, because it's just one of those average years or non-average years. Okay? And then what sounds like a Deadpool quote, it's maximum protection. Okay? Maximum protection. Again, you guys are now all 1099s. You remember this thing you guys used to have as W-2 employees? That was HR called it something. It was benefits, I think. You guys remember that? Health insurance, retirement accounts, disability insurance, short-term, long-term, life insurance. You had the world was great, right? You didn't have to do anything. Then you all decided to be crazy and jump into the self-employment and independent contractor game, and now you have to build it all from scratch. Well, 2 of the things, life insurance and disability insurance, guess what one of the factors that they look at is? Income. Yeah, I think, what'd you say? Industry and then income for both, right? If you have for disability insurance, you can qualify up to 60% of what your net or taxable income is. If you make $100,000 take home income, you can qualify for a long-term disability policy that's up to $60,000. So if you're deducting everything and you're only showing $20,000 of income, 60% of that, not much. So the cool thing about disability and life insurance is that once you buy the contract at that current rate, you're locked into that contract forever, for as long as the contract is. So if you're gonna show high income one year in order to qualify for rental properties, maybe it makes sense to also look at your life insurance and your disability insurance and up those as well. Otherwise, you're just going back and forth and paying taxes for no reason. Okay? Cool. Let's dive into some fun stuff. Any questions on 3 reasons why I want to use tax deduction and 3 reasons why I may not yet? Yeah.
That's a question. I think use all your deductions.
Correct. I'm talking like the prepaying expenses. So you're allowed to, in December, you could prepay rent for all of 2025 and 2024. So you could take that deduction now, but you won't get it for 20. Yeah. Yep. All right.
Brad,
So,
wait, did you
yeah.
have a question?
Yeah. You can prepay anything. I mean, you can prepay your cell phone bill, your car insurance, whatever bill allows you to prepay something, you can do that. So if you're paying for it in 2025, like you're prepaying your cell phone bill for all 25 and 24, you get that deduction in 2024, but you cannot use it for 2025. No, not that one. So the lenders can add in back depreciation. That's a big one. There is one tax strategy we'll get into in a minute that they actually can build in as well. It's the only tax deduction I know of that you can actually, it'll lower your taxable, or it won't lower your taxable income, but it'll lower your tax bill. By that. Yep. And we'll talk about depreciation. Okay. This isn't super creative. It's just something, again, fundamentally, I think everyone should know. So I'm go this proper. Okay, as mentioned before, once you took the leap into being a real estate agent, you guys have the options in front of you. You can select on how you want your business to be titled. You have sole proprietor, partnership, S corporation, C corporation, or an LLC. In this room, who has a partnership in here? Okay, usually I never see that. Who has a C corp in here? One. Okay. C corps are typically for more like people who need investors, or if you're a California real estate agent, that's only. S corporations. Okay, awesome. LLCs. Okay. Sole proprietors. You. Okay. I tried to see if everyone's hand got raised. If you did not raise your hand, by default, you're a sole proprietor. Because this is the easiest one to get, because you're it. The moment you get in your real estate license, you're a sole proprietor. So, sole proprietor, you get a 1099. Is your basically your 1099. You have a Schedule C at the end of the year, and that's it. So this is the default one, but it's also the most painful one. The reason why it's the most painful one, if you haven't experienced this before, you're about to very shortly, because you have this really painful and nasty tax, and it's called self-employment tax. Self-employment tax is 15.3% above state income taxes and federal income taxes. One more time, it is 15.3%. If you make $100,000 take home or net income at the end of the year, you are not, before you pay your Oregon state taxes, you're also going to be paying $15,300 to self. That sucks. So we want to reduce this as much as humanly possible. So what you do is you start morphing into, but there's a certain threshold, and that threshold is once you start making around 60, I'd write this down if you're taking notes, $60,000 to $70,000 net, so take home income, you want to start making the switch to what's called an S corporation. This is going to save you, I'll use the cut for the point, this will save you a shit ton of money. More money you make, more money you can save, okay? S corporation is the way to go at a certain extent. But first, there's one order of operations I'd like you to take first, and that is getting your LLC. An LLC stands for Limited Liability Company. Okay? There's three main reasons to become an LLC today if you're not. The very first one is the LLC is a form of protection. However, in the state of Oregon, real estate agents who are LLCs, the state does not recognize you as giving you the protection that other states would, but it's still, there's other reasons to become an LLC. Because it puts a line of demarcation between your personal and your business assets and finance. Okay, it separates them out. Keeps you organized. Because once you file for an LLC, you can also file for what's called an EIN number. An EIN number is an employer identification number, and it acts as the social security for your business. You take your LLC, you take your EIN, you go to whatever bank you want to bank with. You go to On Point and mention my name and get a $50 rupee. But if you go whatever bank you want to bank with, open up a business checking account. The number one reason people get audited in this country is because they commingle funds. So I'm not going to call anyone out. I'll just see it by the facial expressions in here. If you guys are mixing funds where it's personal and business income coming out of one account, that is a surefire way to be on the IRS's radar for wanting to audit. So you need to start separating them out. Okay? LLC, EIN, business bank account. Every single thing on that sheet comes out of the new business bank account. You go talk to your brokerage, and their brokerage will say, every single time I get paid, please put it into my LLC business bank account. That keeps things super organized. Okay? That's the basic fundamentals of it. New thing that passed in 2024. I'm sure you've heard this around. It's called a BOI report. Beneficiary Owners Report. With information, that's it. So this thing is like 5 minutes online. What it's doing is it's now letting not only the Oregon state know that, hey, I'm an LLC, but it's letting the federal government know that you're an active LLC as well. You're not writing this down? Here's the reason why I want to write it down. It is a $592 a day penalty that you will be getting if you do not fulfill this 90 days after you get your LLC, or if you had an LLC before 2024, if you do not have it done by January 1 of 2025, one more time, $592 a day penalty, all the way up to a maximum of $100,000. You're not messing around. The whole point is, prevent money laundering and know what LLCs to go after and stuff, and make sure that they're not wasting their time on inactive LLC. Okay. BOI report. Yep. Okay. Recap real quick. Sole proprietors suck, right? Self-employment tax of 15.3%. LLC, you're all going to do it today if you don't have it already. LLC, EIN, business bank account. Tell you that they have it. They're going to start paying you there. Expenses from that sheet come out of it. You fill out the BOI report, and life is good. Cool. Next, you guys make up more than $60,000 net income, probably around $80,000 to $100,000 GCI. You guys want to start morphing into S corporation, and here's why. As an S corporation, you can pay yourself into two separate categories or two different ways. The first one is called a salary, or a reasonable salary, is what the IRS states it is. A reasonable salary, we'll talk about what that is in just a second. But a reasonable salary is you are becoming a W-2 of your own business. You have to pay yourself an actual payroll. Like you get a W-2 pay stub at the end of the year. A lot of people think, well, I have payroll because I move money from my business account to my personal account once a month. That is not payroll. That's a distribution. Payroll comes in the form of ADP, Paychecks, QuickBooks. There's other payroll companies out there, but you're paying into FICA, Medicare, Social Security. You're paying into all that kind of stuff. Okay. Now, the reason why you want to do that again is because as a sole proprietor, you pay self-employment tax. S corporation, you can split that into two categories. Let's run an example to make it easier because I think I lost myself in one of those moments. So here we are. Sole proprietor, you make $150,000 GCI. $150,000 GCI. You have $50,000 of expenses. What's left over for your taxable income? And you're paying 15.3%. So what is that? How much taxes? $15,300 as a sole proprietor. But you listened to me, and after this, life is good. It became an S corp. Same situation. $150,000 GCI, $50,000 in expenses. So your taxable income is what? You can split that into two separate ways. You become a salary, reasonable salary, and if you're a successful company, you show profits in the year. So you got 50-50, 50,000 in salary, 50,000 over here in profits. The benefit of profits, there's no self-employment. All the way up to $168,000. Okay? So you just made the exact same amount of money, but did your accounting a little different. You cut that $15,300 tax bill in half. So you save $7,650 by doing the exact same work, just doing the accounting a little bit. Okay? That's why the S corp that out. The more money you put in the profits, the more money you save. Questions? Questions on the S corporation, salaried, profits, any of that kind of stuff? Yeah. No, you have to pay yourself a reasonable salary. And a reasonable salary in the state of Oregon is $42,000 for real estate agent because that's what the average real estate agent. So we try to keep it as low as possible. I just keep the math simple because but we try to keep your salary as low as we legally can. Yeah. So you can do a one-time payment at the end of the year. You don't want to continue to do that because the IRS, their justification is what employee would ever work for a company where you get paid once a year. So you can do it in order to satisfy the needs of it, but ideally you'd like to have it coming out this month. A lot of our clients do it twice. Yeah. We do it if it's your first time becoming an S corporation. We just take a look at how much money you actually made and you're taking home, right? And then we just kind of do a reasonable salary from there. So we can break down the reasonable salary into saying, I mean, you guys all know you do more than just, open doors and chill home, right? I mean, you guys are like social media managers. You guys are doing all the paperwork, the assistants. We break down the job titles to justify what you pay somebody to do your job, and that certainly. The shareholders, yes, but that's if you have business partners and stuff. It's just you. You can pretty much do whatever you want. Another thing too, for lending purposes, just because your salary's low doesn't mean that's like all you're going to show on your income. Lenders will take in consideration the W-2 and the K-1. So in that situation of 150,000 minus 50 equals 100, and you split that up, the lenders will always see the 100,000. They just want to see that $50,000, which would be the cell phone bills and stuff that you're deducting. Yeah.
Courtney and then Dana.
Yes, so you can take as much money as you want from the distributions as possible. Just because your salary is set at $30,000 does not mean that's all you get. I mean, who can live here at $30,000 a year, right? So you can take as much money as you want out of the profit side anytime you want. You just want the payroll to be consecutive and then fulfill the IRS's needs that they need in order to make you legit. So, yeah. It's opposite. So LLC sole proprietors are more often than audited than S corporations, and typically is because S corporations have to be a lot more compliant. So there's a business tax return and a personal tax return. You have bookkeepers and payroll. So, I mean, surprise, surprise, the IRS rather than go after somebody where they can just say, hey, you screwed up. Here's $2,000. You owe me $2,000, and that's it. Versus going after the guys who got people like us to back them.
Dana then Brad.
Yeah. Yeah.
So I was just like, with the taking things. So
there's nothing. You can expense whatever you want. So the S corporation, again, the only reason why you make that switch is at $60,000 net. So if you had $150,000 and $100,000 deductions, the S corp might not make sense. There's no tax on the expenses. Yeah. So yes. So the reason why I say the $60,000 is the threshold is because if you can find enough expenses where you get your tax bill down, the S corp doesn't make sense because you have to pay a CPA to now do business tax returns, which is due on March 15th. Then you have to do your personal tax return. And then you have your payroll that you have to pay and your bookkeepers you're paying. So all in, you're probably paying around $7,000 to $8,000 a year to run as an S corporation. So if you're not saving a minimum of $7,000 to $8,000 a year by being an S corp, it does not make sense. Yeah, you could do. Yeah, there's plenty of things which we're just about to get into all the fun stuff.
Maybe Bradley and then
Oh, yeah,
Phil,
yeah.
sorry.
Okay, thank you. You actually saved my ass right there because that was the third reason why you were in LLC. So LLC, yes. Let me go back. Thank you so much for putting me back on track. My little ADA brain, squirrel brain was going everywhere. Okay, was that the last one?
Yes, that was it.
Okay, perfect. Thank you. Okay, backtrack real quick. LLC, EIN, BOI, S corporation. The three reasons why I want to be an LLC. That list. The first one was the line of demarcation, separation, right? And then you get your organization, which is your business bank account. The third reason, and then I'll go back to that one too. The third reason is if you get your LLC today, we can do what's called a backdated S corp, all the way to the formation of your LLC. And if you get it soon enough, we might be able to actually go all the way back to the beginning of this year. Okay. So it could save you tons of money. So if you're like, shoot, I should have been an S corporation all year, get your LLC today so we can do the backdated S corp and see if it makes sense for you. Okay. Worst case scenario, we find as many deductions as we can. You don't need it, but you have it now for 2025. Okay. So good stuff. Real quick, last thing, I'm just going to leave my brain and I'll get right there. But like I mentioned earlier, the LLC, you do not have, it does not give you the legal protection in Oregon. Okay. Sorry. So what you do after this, once you get your LLC, you now go apply for what's called an umbrella policy. Right? Familiar with umbrella policies? Okay, an umbrella policy, basically just to recap, just goes over, it acts as an umbrella over your home and your auto insurance. So if something happens, they can sue you, it goes above the car insurance, right? Then they get, after the car insurance, the umbrella insurance will kick in up to $1 million increments. It's only $20 a month, maybe, and it'll protect your assets. So please get an umbrella policy. It sounds like an upsell from your insurance company. I'm telling you, I have no skin in the game. Just go get it. As Oregon agents, you need it because the LLC does not separate the business personal or protect you on the business person side. Thank you. And then
Dwight always says that too.
Yeah. Free. Yeah.
Because you're an S corp.
Yeah, so we've had 3 people get audited as S corporations, and they all pass with flying colors. That's the whole point of having a book and doing everything in sync, in unison, right? Like it's the LLC EIN organization, because what they want to do, they want to make sure it's not only just proof that you have it, but it's like making sure it's not egregiously over the percentage of how much money you're making, right? 200. 200 and counting. I mean, I got but and counting, but. Like for an example, you mentioned meals, or somebody mentioned meals. If you're making If 20% of your income is going towards meals, there's a problem, right? So what we do is we track every single thing possible. We rather have you guys be over aggressive with your business expenses. And then the purpose of having a bookkeeper or CPA on your team is at the end of the year, you do tax planning. So I can say, okay, we're in December. We're about to do this with all of our clients. We're in December. Where are we at? Well, I can see you took my advice on using your business card on meals because you're at 20%. We got to get rid of some of that to make it, not as obvious you're abusing this. And we'll drop it down to an appropriate amount. Okay. Same thing with, you're hiring your kids and stuff. There's all these strategies we're about to dive into in a second. Why take advantage and poke the bear doing all these tax deduction strategies if you don't really need them, right? So hiring your kids is cool if you're making, $200,000 and $300,000 where you need that extra $30,000 of deductions if you have your kids. But if you don't need it, why poke it? So we do everything based on the percentages afterwards, and then we reconcile the accounts every single month. So we have proof that you're saying that you spent it, and here's the exact number. What the IRS looks for is if you have round numbers. Round numbers are bad. So if at the end of the year, like my cell phone bill was $2,000 or whatever, then, okay, there's no way it's $2,000. It should be in pennies and extra stuff like that. Yeah. Yep. So we get what's called third-party access, read-only access. So every single time we bring somebody on, we get read-only access to the business bank accounts. We pull the statements and then we can reconcile it every month. Then we send you a list of questions for things we may not know, like Amazon or Fred Meyer's or Venmos or something that we just see the basis of it on, and then we put it in the correct category. Yep. So we do it all for you. Everything's reconciled. You get profit and loss statements in the form of the MREA chart of accounts every single month, right? Make sure you know exactly what's going on in your business in and out, and then we justify it. We justify it by the percentages at the end of the year. We help. Cool. Yeah. So let's let me think. We can just freaking open up. We got technically 10 minutes.
Yeah, we gotta have you back.
Yeah. So we have, couple things. One, we do offer 20-minute free consultations to everyone. So the free consultation is not me selling you how great our company is. Hopefully I just did that in the last 15 minutes telling you we know what we're talking about. We wrote a book. That helps too, right? I know about the LLC, the EIN, the S corporations, the tax deductions. Like, I want to be such a value to you guys that when the time comes to hire someone like us, you can't go anywhere else because you're like, these guys have my back. I know these guys know what they're doing. Look at the 125-star reviews. Like, we know we are good at what we do. We just want to help as many people as we can. So the 20-minute consultation is truly looking at your specific situation and how we can be a best benefit and work together. Even if it's something as simple as just showing you how to get the LLC and EIN number, because when that time's right, I know you're going to want to come back to us. So these are the things. I can open up for Q&A instead because we have to be out of here in 10 minutes.
No, we can go a little.
Okay. Well, if you need to get out of here in 10 minutes, then obviously feel free. But these are the things I was going to go over, which are the really fun stuff. Augusta rule, which I can talk about in just a second. So I think these are. There's always people ask about employing your family. Should I hire my kids? Should I hire my spouse? Should I buy or should I lease? Is it mileage or is it expenses? The 6,000-pound rule. Should I buy a Tesla Model S versus a Model Y? Traveling, vacations. I can talk about this shit for relevance. So, is there anything in particular you guys like to talk about? Because the LLC, EIN, and the S corporation, I think, is so crucial for you guys to know that I can kind of float into any of these categories. Yes. I know it sounds like a cop out, but it's not. It's the ones who didn't have us before the bookkeeping. So they're getting audited in 2023 and they came to us in 24. So as their previous bookkeeper who was doing everything. So going back to your example, there's most people use a general chart of accounts. So it'll say meals and entertainment. Even though there's no entertainment in that category, it's still showing up on the category. The IRS's little spider bots go around, they see entertainment, and they're like, that person's using it incorrectly, and they go after the other. So meal or entertainment went away in 2017. So if you're deducting your Timbers tickets or your Winter Hawks tickets or your Blazer tickets, those are not business expenses.
We used to.
Yeah, we used to be able to do that all the time. The only way to get around that, you guys can do this if you like, but it's a lot of money, is if you have your logo somewhere in the arena. And it can't just be you put a piece of paper up there. I'm talking like you're in the hockey rink and you see that your logo is right in the ice, right? Because then you have to take your clients there in order to be able to show them, hey, this is what I do. Then you can deduct your season tickets. Yeah, exactly. Yeah. So that is the only way you can deduct your entertainment. There are what I like about doing this is like a lot of people will start asking these questions like, well, what about this? What about this? you're asking me the question in that tone of voice, most often than not, you know what you should be doing. Shit. Now that being said, when you go into the sporting events, when you go into those sporting events, the meals are deductible because you can all the hot dogs, the burgers, the beers, all that's all $15 beers that they check everything up to. Those are all deductible. Right? Those are counted as meals. Now, when it comes to meals, there's 3 types of categories. The first category when it comes to meal is an external meal. That is if we all, or no, that's if, let's say you and I went out and we talked more about doing more classes and stuff together. We went out to a restaurant, I paid for it. I get to deduct your portion, not mine. It's a 50, it's called an external meal, it's 50% deductible. Then there's things called an internal meal. An internal meal is whoever bought those bagels and the coffee and everything, you brought those in for the class, so we're working through it. That would be an internal meal that is 100% deductible. So if you do open houses and you have a charcuterie board and a 1942 bottle of tequila or something, you know, and I stopped by and we had a good time, talked a little bit. That would be 100% deductible versus if we went to a restaurant where it's only 50%. Last one, travel meals. If you guys leave here and you go to Starbucks and you get a bagel and, well, I don't know why you get bagels right here, so it's a bad example. Let's say later on you go to a restaurant or some coffee shop, different coffee shop, get coffee and a bagel, that would not be deductible because that's a solo meal. But if you're traveling, you can deduct solo meal.
So if you were entertaining,
Correct. Well, the bill would be 50% deductible. The entirety of the bill would be 50% deductible. Just keep what the IRS wants to see. They don't want to see the end. They want to see the breakdown of the receipt. So we use a software called QuickBooks Online for every one of our clients. So there's an app you can use. You just scan the picture. It's the second button. You press the open, press scan, take a picture of the itemized receipt, and you're good to go. And that's why you pass the audit test, is because you take pictures instead of keeping paper receipts that get lost. Right. Yeah. Yeah. So. Yeah.
That's the Tony was talking about.
Yeah, that would be a 20-minute conversation. We could talk on that one. So there's different ways. There's a lot of rumors I hear too, where you could buy the car and have the company lease it back to you. It's your skin in the same cat. I hate that analogy, but that's the way it is. So, like another thing that I don't know. I want to answer you guys' questions. So that's meals. That was entertainment. That's why people get audited, because they have meals and entertainment and they abuse the rules. Another one is if you're doing stuff like personal, you're like, oh, I need to, sorry ladies, but I need to get my hair done for my headshot. So that's a deduction. That is not a deduction. The whole purpose of deduction is something that you would do not in a normal day to day. So if you went and bought a nice new suit or a nice dress for some kind of event, that's not a deduction because of the fact that you would be, no matter what, buying that dress or suit or something like that for if you weren't a realtor at some point anyway. But there is a way to get away with it. The only way to get away with it is it has to be personalized or have your logo somewhere on it where, yeah, so you bought it for business. So for an example, this vest I have on right now, right?
All right.
So the vest I have on right now, this is a deductible item, right? It's got my logo here and it's pretty freaking obvious in the back that I got the logo there. Right, so this piece of clothing would be deductible. The shirt underneath it is just a black shirt that is not deductible. What I used to do for any time I used to wear suits before COVID happened, and then everyone realized I don't really need to wear suits as much anymore. So I was like, I'm not going to do that. But before, I'd always have on the cuff of my dress shirts would be my initials, and on the inside of my vest, I'd always have my initials or the logo. Right, so anytime I would buy articles of clothing that I knew were going to be a little more pricey, I would always brand them myself. For an example, if you find that Louis Vuitton bag you really want for your laptop, that your laptop could fit in it, you can brand it with your name on it across the handles or somewhere, or your logo. You can now deduct that. Again, don't abuse it.
Let's go to Louis Vuitton.
I'm talking it has to be a part of it. Has to be embroidered.
Yeah.
The whole purpose is you cannot put a sticker on something and say it's deductible. You have to embroider it. So again, don't abuse the shit out of it. Don't all of a sudden spend $50,000 to 50% of your income on Louis Vuitton or Gucci stuff. Just sparingly. That is one way you can absolutely get it. So, yes. Any other questions? Yeah, travel and vacations. And then what do you want to talk about? Yeah. Well. So the vehicle, good question. So I answer that. That's a quick one, and then we'll go into the family. The quick one on that one is no, it has to be a part of it. It has for vehicles, it doesn't matter because you're the owner of the company. So that at the end of the year, your CPA should say, hey, how much part of your vehicle was used for business? You say 70% of my vehicle was used for business, 30% was personal. So they will take 70% of the mileage log you have or 70% of the expenses you take, and that's what they'll use. Does not matter if it's yours or in the business name or not. Ideally, it's supposed to be in the business name, but it's not a big deal. It's not.
And
Yeah.
a question. Starting out,
Mhm.
like this, and you go to, you're putting, obviously, you're investing in this, so you take personal funds.
Yeah.
How do you then consolidate the?
Easy question. Write this down. It's owner's equity. That's all you put. Then the memo line, owner's equity. Because if you use taxable money you put in your business, you don't want to have that count as income at the end of the year. You want to make sure that the IRS knows that was money already taxed on. That's it. That's owner's equity. Okay, vacations, right?
Yes.
Cool. Good. Okay, so by the way, if you think this is super fascinating like I do, don't forget, $20 after this. Okay. So, vacations. The rule with vacation is you cannot just go to any place in the world, take out your laptop, put up a listing, and say you worked. That doesn't count. You can do that here. When it comes to vacations, and writing them off, you have to be in that specific destination for business. You have to be doing business in there. Luckily for you guys are real estate agents, and it's pretty hard not to work anywhere you go. You know a realtor in Mexico? If you don't, could you find one?
Yeah.
When you go to your vacation in Hawaii or something like that, or whatever last place you went, did you ever think to yourself, God, I wish I had a rental here so I could just come back again? Right? So you guys you have opportunities everywhere. So the idea is you're supposed to be working at least 50% of the day should be dedicated to the business. So on that day, go stop by in your location, look up like on Zillow, say like open houses near me or investment properties near me. And then you actually put it in your calendar. This is why people get audited because they say they did and they didn't do it. Put it in your calendar, put the address, put the time you went, actually stop by, grab a flyer, grab something just in case it ever did happen. But take a little bit of time out of your day. If you really don't want to do that, then don't. Then you can't deduct it. Okay? Corporate retreats. As S corporations, another reason why I want to become an S corporation is you do get one corporate retreat a year where you do not have to do anything in regards to business. You just get the deducted $1,000. So we do that with a lot of our clients. A lot of our clients like hunting trips, or a lot of our clients, because we have a lot of clients on the East Coast and Missouri and stuff. For hunting trips, or if they go to like Europe or something like that, they will use their company retreat for that one bonus that they get. Yes, you do. So we'll send you a list that you need to fill out in order to be able to justify it as being a company retreat. Yeah. All your 50 LLC, you can do it. So what we do is like, we have a monthly bookkeeping, not even it's a cost, but at the same time, we're going to make, the whole point is, again, I should be a profit center for you. If you're going to hire me, I should be making you guys money, right? You should never look at me or look at the money coming out and thinking, shit, why am I paying these guys again? No, we're making you money because we're helping you keep more of the IRS's hand. Yeah, so we're $350 a month. So that's what we do that's our base minimum, depending on how many transactions go on. I don't care if you make $100,000 or $2 million or $3 billion. It's all about the amount of activity that happens in every single account. If you're going to be a monthly client of ours, and we get you that monthly profit and loss statement to form the MRE chart of accounts. And then you have other businesses like a rental property or other businesses that don't require as much as 350, then we take them on by the hour. So we have other clients who have other businesses on the side, and then here we just do a 1 year cleanup, and it's maybe a few $100 or whatever, and that's it. It doesn't just warrant a 350. Typically the 350s for yeah. Yeah, so in 2025, we will be filing, or 2025, we're opening up our tax filing portion of the company, so we'll be filing people for 2024. We're only taking 100 clients on this. So at our big event that we're hosting, we're going to have sign-in sheets, and whoever wants the first sign-in spots, get them. But we're only going to be taking on single-member S corporations, just because we want to protect it from the very beginning and not screw it up. Yeah. Yeah.
So, talk about the LLC.
So when it comes to real estate, it doesn't really matter because of the fact that they'll base it on wherever the houses you're selling. So you're going to be paying Oregon taxes regardless. So that's more for estate planning.
And for
Does not include the QuickBooks Online, but they're all deductions for you. We have a monthly contract, so if we want to earn our keep every single month. So if at any point in time you're like, hey, business is slow, I need deposit, or hey, I just want to take it over myself, or I'm getting out of the industry, we just close up that month, let you guys be primary admin, and it's your QuickBooks forever. I don't believe that we should own the QuickBooks. It should be yours because it's your business. So Everything's a deduction.
I got mine.
Tell me a little bit more about home office.
Yes. Oh, beautiful segue. God, I feel like sometimes I plant people in the audience. All right, let's go back real quick. So,
Big bird.
perfect. How do I go back? Or how do I go forward? Or
Oh,
back?
down is up, or down is forward.
Go back to the Augusta rule. Okay, so there's two options you have when it comes to, you can either choose a home office deduction, which is where you get a percentage of the square footage of your house that you're using, right? Most people do that in the beginning. However, if you only get 10% of a $300 bill, you're not saving that much money. It's great, but it's not, there's something better. We can talk about home office deduction a little more, but I think this will beat the home office deduction, which is why I want to go. Can you go back to the Augusta rule slide? So if you're an S corporation, you can take advantage of something called the Augusta rule. Actually, sidetrack, you can take advantage of this Augusta rule even if you're not an S corporation, but I'll show you why it's more beneficial as an S. The Augusta rule is section 288 of the tax code, and it states that any person in America who owns a primary residence can rent out their primary residence for up to 14 days a year, and any money that's collected within those 14 days, there's no tax on. Okay? Here's why. Whatever they pay for whatever they're paying for that day. Like, hey, Airbnb, I'm buying it for the day. Hotel, you buy it for the day. You show up whenever. It's just saying whatever your going rate is for that day. So here's how it came into fruition. Yes, something to be. So here's how it came to be. Thank you. There's this big thing called the Masters tournament every year. It's like the Super Bowl of golf. I'm not a golfer myself, but I know enough to know that part. So what happened was a long time ago, the Masters tournament was being first held at Augusta, Georgia, and all these people had these really nice homes around the area. They were renting them out to people who were PGA players, who were business sponsors, the PGA players' families. They were renting their houses out and making a shit ton of money for those couple of weeks that it was going on. At the end of the year, IRS came knocking on the door and said, hello, everyone. Don't forget, taxes are due. You actually owe us the rental income from the time you rented out to your primary residence. And for the first time in history, I think, everyone got together, went to the IRS, and said, technically, IRS, by your own definition, do not fit the definition of a landlord. Therefore, we will not be paying you taxes you think you owed. The IRS actually agreed and said, well played. Definition of landlord states this. You guys are not that. So, section 288, the Augusta rule came into play. So every person who owns a primary residence, doesn't matter if you're an S corp or not, S corporation or not, if you own a primary residence, you can rent it out for 14 days, collect any money you want, and there's no taxes on it. Here's how we make it beneficial for our S corporation client. If you're an S corporation client, as one of these people mentioned, you should be having a shareholder meeting once a month. That's right, a shareholder meeting once a month with all the owners. So all you, yourself, and all the personalities you have that day should be together on working on your business, okay? What we do, instead of the home office deduction, we take your business will be renting out and have a formal agreement with your rental property, or with your primary residence, sorry, backtrack. Business has a formal agreement with your primary residence, and you rent it out once a month for this meeting. There's two ways you can figure out how much you want to rent out. The conservative way is you take 3 zeros off the value of your home. So if it's a $700,000 house, you can rent your house out for $700 to your business. Or you can do what 80% of our clients do, which is more the aggressive way, but it's more of the, I guess, the aggressive way, but it's you take what's called comps. So if I called here and I was like, hey, I want to rent out this whole conference for room for the day, how much you can charge? Most places will do about $1,000, so that's what we do. So let's walk through the math. $1,000 comes out of your business bank account because you're renting to your primary residence. Your primary residence collects that money in your personal account. You rent it out once a month. That's $12,000 a day, or a year, right? $1,000 a month, 12 days out of the 14. $12,000 a day you can take out of your business account, move it to your personal account, claim it on the personal income taxes, but not pay taxes on it at all because you filed Section 288. So if you're in the tax brackets of the people we work with, that's a $3,000 to $4,000 tax savings right off the bat, which is why I'm telling you we will make you money and we're not a cost. Questions? Yeah, so the way we work is we'll clean up your books for the first year, the first part of the year. I get you a quote and say, here's how much it's going to be to cost or to get everything caught up. Once we get everything caught up, then you and I will sit back down together and we're going to say, okay, let's take a look at all the work we did. Let's look at all the percentages and where you're at, missed opportunities, areas we can improve. Let's build some more systems. And then I'm going to say, here's all the strategies we use, and I need you to fill out on your end. We'll do all the back. Mainly for the industrial, we need you to fill out meeting minutes. Again, so if you ever get audited, it's like, here's what I did, here's what I talked about, here's what my address, here's the legal agreement I had, here's the money that moved, here's the transactions, and we do all that other stuff for you. Okay? So most people just take the meeting minutes and do it once for all 12 months. They call it a day, but that's a we just want the back end. But we will be doing all these strategies for you in the sense of showing you how to do them, and then the back end making sure the money is moving and account it accordingly. That's pretty cool, huh? But we only use 12 days. 2 more. How many of you guys in here have done Friendsgivings or Christmas parties or poker nights or 4th of July parties or Wine Wednesdays or whatever you guys do, right? I mean, you guys can do whatever you want, but the point is you have 2 extra days you can use to be able to rent out your house for. There's an extra couple $1,000s in savings you can get. We have one of our clients who has a massive Super Bowl party every year. And what they do is they call every bar around and they say, hey, I'd like to rent out your bar space for a Super Bowl party. What do you rent it out for? $4,000, $5,000. Some people laugh at them. He takes that number, says thank you, has the comps for it. Then writes down the date, the time, and the bar that quoted him. Then he rents his house out instead. He has a big pool and big theater room and all that stuff. And he has a big party. He gets to use an extra day of the 12 to get to the 14 and deducts an extra $5,000 from it. Questions on the industrial, and that's why we use the industrial over the home office deduction. Home office, it's just percentage of it. Yeah. Yep. If you need to go grocery shopping that day, that'd be a good day. Yeah. So yeah. So that's it. Now again, percentage-wise, couple disclaimers because we're coming to the end of it. Couple disclaimers. Number 1, the industrial is cool. If you don't need to use it, don't use it. Right? There's no point in like I said, poking the bear. If you guys, we already did a great job doing the deductions. At the end of the year, we'll just scrap it if we need to. Right? But if it makes sense, we'll keep it, we'll make it happen, we'll be good to go. Second thing, I know you guys are probably like, wow, there's no way this guy is an accountant. But guess what? I'm not. So I own the company with my business partner. We're the ones who are scaling and growing. We're finding the best bookkeepers and tax filers across the country. We're bringing them on board. We are a United States company, so we don't go overseas or anything. It's completely here. We just want the best of the best bookkeepers. Like I said, 127 5-star reviews. We know what we're doing. We have a proven track record. We've failed forward many times, but we've dialed this thing in. That's why we're only taking 100 people for the first year of our tax filing. We want to make sure we're just doing it perfect. Okay. We also, the way we learned this stuff, there's a little backstory. Not a long time. 7 years ago, I was a financial advisor with my business partner. And what we would do is we would find these creative tax strategies for our business owner clients. And any money we would find through tax savings, we would use that money that was free to use for investments or life insurance or retirement accounts and that kind of stuff. So I said, Mr. and Mrs. Business Owner, if I can save you $30,000 in taxes, let's use that money that you were already paying the IRS and use it for life insurance to build a better benefit you can. Pretty simple sales pitch. The number 1 reason all of our clients came to us was because of that portion in our network. They didn't give 2 shits about the actual products and stuff. They said, we really just like the tax. I would have paid you 10 grand for the tax savings. So that's why we opened up Northwest Premier. We had that beginning consulting portion, and Northwest Premier was born. Then we got tired during COVID. We got tired of freaking giving all this money away to bookkeepers and other tax filers and teaching them what to do. If I can read a profit and loss statement and a tax return better than they're doing it, then why the hell am I spending my time teaching them to get paid when I'm just getting paid one time? Why don't we keep the money in-house? So we decided to open up the bookkeeping department. And then we did bookkeeping just for our consulting clients. But then everyone asked for more book. They're like, hey, we like your bookkeeping. Can we keep doing it? Can we do it? Next thing you know, we're a bookkeeping firm. I love doing the consulting. I think that's one of my favorite things to do is looking at like cost segregation studies or how to like leverage money or the OPM plan, other people's money plan. Like there's all these things that I love to do, but it's just a byproduct of the fact that the bookkeeping is where I need to see the numbers. If I'm doing any of this consulting stuff, I need to know your numbers anyway. So that's why we're growing so quickly. That's why we're able to scale. We also, again, the reason why all these things are audit proof and like how we've learned. There's a guy named Tony Robbins. I don't know if you've heard of him before. But his CPA, his name is Tyler McBroom. And Tyler McBroom is this really well-known tax guru who during COVID had a giant special saying the first 500 business owners across the country that signed up for my lifetime membership, you're locked in obviously for a lifetime, and it was a discounted price. So we took a good chunk of our money and we invested into it. So we meet with this guy once a month. talk to them about the new law changes, tax strategies, how to make sure they're in compliance. He sends us case studies of people who've got audited, like people have used the Augusta rule. They're like, you own a $1 million house, but you're renting it out for $50,000 a year, like, you know, those kind of things. So we learn how to not make, or to make sure these strategies work correctly. We talk to the best of the best, we hire the best of the best, and we're just really good business owners who know how to scale a company. So 10 minutes over. I'll take one last question if you guys have anything in regards to the list that was up there. And then again, please, I would love for you guys to be at our big event in December. It's $100 to show up, but we are going to have, you get 2 drinks if you get the VIP stuff. We're going to have those 2 amazing guest speakers and then do our big grand reveal of our new company. And the book's up here for sale that goes over everything we talked about, $20. Is there any other questions I can answer? One more question. Clear as mud? Cool.
Yes, Mike, thank
Thank
you
you.
so much. Round of applause. We'll have to have you back again. This was great. I get asked all the time. We have a good bookkeeper, and I've even got a couple text messages during this class saying, "Oh, this is great."
Oh, awesome. Oh yeah, there's Zoom land was out there, huh?
Good
I
to
didn't look
yeah,
at the
Zoom's
camera.
out there too.
I was looking at everyone else like more Zoom land.
Oh,
My bad.
you.
Yeah.
Thank you guys. Have a great day.